I love the contrarian approach. I think in finance, you have to think that way because your emotions run contrary to how the markets run. So when everything's, doom and gloom, it looks like the world is over. That's the time to buy. But it's like emotionally, you're like paralyzed. A lot of people are paralyzed. They don't want to take action. I have one similar, which is Dave and Buster's, but it was when everything looked like we were never going to get out of lockdown. And it was like, it looked really bad and all the restaurants were shutting down. I bought some Dave and Buster's and it went crazy.
Most people think saving money is the answer. But the truth is, saving only gets you to zero. Join Mike and Zach as they flip the script from saving to earning, from zero to unlimited potential. Welcome to Save to Zero.
Hey, everybody. Thanks for tuning in to episode number 23 of the Save to Zero podcast. We are lucky enough to have Joseph Warren out of San Antonio, Texas with us today. Joseph is a financial advisor. He has multiple areas that he focuses on. He's going to talk some about real estate and some of the other areas he focuses on. And we're going to have a great talk. He's going to give lots of information. So, Joseph, welcome. Thanks for coming on, bud.
I'm really excited to be here. Thank you very much for inviting me.
So from a 50,000-foot view, kind of give us an overview of the areas that your practice focuses on.
Yeah, we call it truly comprehensive financial planning. And my main niche that I like working with is people who have sudden wealth events. So like inheritances, they win the lottery, they come into a lot of money.
I like that term, sudden wealth event. Yeah. I've never heard that before.
I like that. And I like you just said win the lottery. I'm liking this so far. Go.
Well, the problem with that is a lot of times people keep the same patterns going. So you'll hear about it all the time. Like the classic example is Allen Iverson, the basketball player, and you keep the same patterns going and it can really be detrimental because you end up, squandering a great opportunity that you have. So really making the most of sudden wealth events. It can even be just like a stock going public, right?
Sure.
But taking advantage of that and making sure you make the right decisions during that critical moment so you can build financial independence for your family for the rest of your life. A few of my clients, I would say about half have real estate investments. I mean, real estate investments are a lot of fun. I just started dabbling in it myself.
Okay.
But that's that's our bread and butter. That's the niche that we work with. And what we do is something we call truly comprehensive financial planning, where we look to coordinate all the aspects of our clients' finances. So minimizing taxes, making sure the investments are growing as quickly as possible within the risk that you're comfortable taking, making sure you're on track for your goals and you're taking steps to meet them. And you have the savings account set up, the Roth, whatever account is best for that savings goal. And then, of course, legal, business, making sure that's set up correctly, business entities with, real estate, you might see LLCs, things like that. And finally, protecting everything. The insurance, sometimes considered boring, but making sure you're not taking on risks that you shouldn't be taking on.
Sure. Okay. That's a lot to unpack, so I love it. My first question is sudden wealth event.
Yeah.
I'm going to ask, what type of education do you give your clients who have an event like that? And the reason I ask is, when I sold my first company, I sold it to a public company, and I had a sudden wealth event.
Yeah.
And what I did in order to not do something silly, like going out and buying a gold Rolls Royce or something dumb. And I don't know where that came from, but you get my point. Zach, can you see me in a gold Rolls Royce?
It's worth a lot now with gold, but
yeah. But what I did was I left my money sitting in an account and I didn't touch it for a year.
Yeah.
Just so that I could get past that excitement of doing something dumb. And that was just me. So what do you do to educate your clients when they have one of these events?
The first meeting, so sometimes I've been asking clients questions and I've noticed sometimes clients are intimidated before the first meeting, but we really look at the emotional why for our clients and what they want to achieve. And the reason it's more of a talk about emotions and background is we want to see what those patterns were before the sudden wealth event, to see what we have to look out for. Because we've seen different things. We've seen sometimes it's an inheritance of a lot of money, and you don't want to touch it or do anything with it. You have these dreams of setting up a business. I've seen you want to start investing in real estate, but you're like, that's my mom's money. That's my dad's money. I want to let it sit here. I'm not going to do anything with it. So we've seen inaction completely.
Yep.
And then the other side, you think of Allen Iverson and things like that, where it's just like never had money and you go hog wild. You just want to have all the things you haven't experienced. And It's just a lot of it is emotional. A lot of like the money, I've learned even the most like analytical engineer, works on rockets, is making emotional decisions with their money. They all do. But we have to understand that emotional why, and then we can help to course correct in the right direction. So we'll say these are common mistakes that you should look out for. And a thing that we like to do in the planning process is set rules, I call them. So if this happens, so say like, you're about to have a company IPO, and, depending on what happens, stock goes up, stock go down. This is what we're going to do. While we're clear-headed, if it goes down by 20%, this is what we're going to do. If it goes up by 20%, this is what we're going to do. If nothing happens, this is our plan. And we hope for the best, but we have plans for every eventuality while everyone's clear-headed, thinking logically, and then we just pull the trigger when it happens. So there's no emotions involved.
That's fantastic.
Do people try to, it seems like in that case, if you're setting up rules, do people find you before they have a sudden wealth event sometimes?
Usually when it's about to happen, and usually it's usually like a few months out. And a lot of times it's funny because people want to wait until afterwards. And I say, we got to do it before, you can
before
take a
the
small
money
portion
hits
of
the account.
But you want to have the plan before everything happens. And I get that too, because you're like, we can do it after, but it's like, we want to build that foundation first, right? Like, we don't want you reacting like, oh, I just got a bunch of money. Now what do I do? Because that's like, opens the door for a lot of mistakes and missed opportunities. So we'll be flexible even with that. We'll say like, you can play a small part of the fee up front, and then the rest afterwards once it happens.
Interesting. So how did you get into that niche? That's a very unique niche because, not a lot of people go through those events.
Yeah. Just kind of been doing some, searching on who I enjoyed working with. I was working with different coaches, who had a background in marketing. It's not really something that I'm very well versed in, and was kind of seeing that you get commoditized when you work with everyone. And you end up working with some people that you just don't like. It's not inspiring. It's not interesting.
Joseph, I've always said, and I started my first business in '83, and I coined this phrase, feel free to use it and don't give me any credit. All customers bring happiness, some by coming, others by leaving.
Yes.
So I understand exactly what you're saying. Go ahead. Sorry, I didn't mean to cut you off.
No, I really love that. And but it's just, I've been thinking like, what am I interested in? Who's fun to work with? What are interesting? I don't want to, and there's different types of planning, but some of it is like very cut and dry, pretty simple. And then it gets more complicated. I like things that are a little bit more complicated. So I like when you can do some tax planning, when there's a business there, real estate investing, everything you do, it's kind of crazy. The deeper you get into it, you see there's a lot of nuance. Like with real estate investing, you have the real estate professional status, short-term, rental loophole. You have so many different nuances in the tax code that most CPAs aren't looking into, are really bringing to the table. Sometimes I've noticed, and if you're building a portfolio, it's hard to be like studying the tax code. It's boring, and I think it's boring for a reason. So you miss all these opportunities and you pay more taxes.
That's funny. Oh, wait a minute. You're telling me the government does that intentionally so that you can pay more taxes so they can send more money to a foreign country? I'm just asking. That's not a political question. I'm asking.
I think, the incentives are that's the revenue that the government earns. Their incentive is to earn more. So it's complicated, and I think it's for a reason, maybe from lobbyists saying, let's make this complicated so only we can benefit from it, or I don't know what it is. But
so you also said that you focus on the legal side as well. Do you have somebody in-house, or is that someone that you coordinate services with?
That's a great question. So we have someone we coordinate with, just to be very direct in the answer. So we don't have like an in-house CPA. We don't have an in-house estate planning attorney. In the local area and even outside, like even in Florida and different places, we have really great CPAs that we vet. We make sure they do tax strategy. They're not just looking backwards. So It's not just like, oh, your taxes are done. It's like coming to the table with ideas like, let's rent out your house to your business. Here's how to do it, and here's how to not get audited. And if you do, you'll have all the paperwork and minutes and everything. Like CPAs like that, we vet them. Same with estate planning attorneys. We have some really good ones. Can I name drop them? Because I like them and they're cool.
Go for it. Absolutely.
Do whatever you want. Yeah.
We have some really good ones like Todd Marquardt, we really love working with here in San Antonio. Rick Escamilla is another great one that we like working with in San Antonio. And, they do the estate planning to make sure that if you can't speak for yourself, your wishes are carried out.
Gotcha. Now, along with estate planning, do they do asset protection as well and setting up different entities in order to protect against individuals who don't want to work very hard and want your money?
Yep. And the reason we like those is they also do business law as well. So they do, like, they'll put the LLCs, setting up trust. They do asset protection as well. And something we have here in Texas is a Texas series LLC, where sometimes you'll put separate rental properties into different series of LLCs. So they're all separate from each other. And if something happens in one property, it doesn't affect the whole portfolio. So yeah, they're versed in that. Yeah, I think estate planning is kind of more the generalist thing, but yeah, they help to with the asset protection as well.
I think that's really smart. I like that you don't pretend to be a CPA and an attorney and asset protection and all this. You know what you focus on, and you lean on other people in your market that you trust, that you can work with your clients.
I really appreciate that. Just to clarify, because I know sometimes it can be confusing. It's like we want to quarterback everything, because a lot of times people's CPAs are not going to communicate with their estate planning attorney and their insurance agent. Yep. And they're all going to have different ideas of what's important to you. So we make sure they're all playing by the same playbook. So analogy you could use is like the NBA Dream Team. I remember that when I was a kid. You have like Michael Jordan, I think Kobe, like all these.
Wow. Joseph just told us he's old. I have no idea what that is. I've read about that, but I don't know what it is.
History book, Mike?
Yeah, in a history book. Ancient history.
I remember that those days, back in the horse and carriage days. But no, I'm just kidding. But you had such a great team, right? It doesn't matter how great the team is. If they're not playing by the same playbook, they're going to run into each other. They're going to make mistakes. They're going to miss opportunities. So it's making sure, telling the CPA, we expect a tax strategy. We need a strategy for how they're going to minimize their taxes. This is what we think they should do. What do you think? What can you add to this? And really having the estate planning attorney say, and the business attorney say, we need a strategy for this. What entity should they use? Should they have a separate entity for maybe, short-term fix and flips versus long-term rentals, right? Is it even worth doing right now? Should they wait until they're making a little bit more money? Like, what do you think? And we don't, because we don't know everything, but we learn a lot through that process.
I like that you keep using the word strategy, because so many people see their accountant on April 14th when they drop off a box of paperwork and say, all right, do my taxes. And, and they don't plan for things. And there's only so much your CPA can do with stuff that's already happened.
Yeah, and I don't want to blame the CPA. It's almost like that's what most people want. And the market kind of wants, just do my taxes.
Right.
But you want to get to a point, if you're building wealth, if you're building a real estate portfolio where it's fun, like where you have a tax strategy, where you have a strategy for paying less in taxes. You're using your business, you're using your real estate portfolio.
Yeah, blaming a CPA is like blaming a doctor if you get sick. There are some, the doctor, the information is out there as to what you should and shouldn't do. Now, nothing shoots 100% because the human body is what it is, and there's so many nuances and variables. But the point is, you can't suddenly be in completely bad shape, and then you go to the doctor and you get mad at them because now you need your knee replaced. Well, you're carrying a little too much weight on your knee, or you're not exercising properly, or you didn't take. I gave you these medications, you didn't take them. Well, why didn't you call and tell me to take them? No, you're an adult, so you got to be proactive.
Yeah, I totally agree with that. Yeah, that personal responsibility. I think that's where it all starts. Really, you gotta have agency. You gotta be, what's the word? An internal locus of control.
There you go. Yeah,
where you say like, this is my fault. I take responsibility for this. But yeah, we know that when you have a mastermind of these experts working together, you're going to have a much higher level strategy than I would come up with myself. And we like to lean on them because that's their area of expertise. They know it very well. Some of them have their own tax AI setup that they have with really cool ideas. So we like to lean on that, and we don't pretend to know it all, because I feel like that's a recipe for disaster.
Well, and I like the fact that you mentioned that the attorney, because the second attorney I ever had in my first business, he focused on entities, business law, and tax preparation. He actually knew how to do that as well. So he understood how, if you were going to buy something, what the potential tax consequences were, even though he wasn't a CPA. And then he had a CPA that he brought in for stuff he couldn't answer, but he didn't do personal injury. He didn't do any of that stuff. He didn't do collections. Those were the three areas, and that's what the whole firm focused on. And he had probably 8 or 9 attorneys. So
Yeah.
the fact that you've got people that are focusing on these specific areas, they're naturally going to get better at it.
Yeah.
And, it's their area of focus. Whereas if you get a generalist, no, the generalist isn't going to work. And then it makes sense to niche down in anything because, as they say, you get rich in a niche.
Yeah, like the attorney we
this is
use
niche.
for our lending. That's all he does. He's an expert in it. We don't have the attorney you see on a billboard on the side of the highway that we use for our real estate stuff. We don't do that.
Yeah,
Absolutely.
It's really smart. Yeah, I agree with that.
Okay. So it says here that you like to balance personal and business finances. Explain how that works and how you do that.
Yeah, you probably heard a term, and I know I've lived this before, where you don't own your business owns you.
Yep, sure.
And
You've heard that.
It's a trap. It's very common for businesses. I know it's happened to me in my financial planning business. And something I'm a big believer that real estate investors, any business owner should do is track your metrics, right? There's lots of what's the return on investment here? What's the cap rate? All these different things. But you want to track your time as well. Like, how much are you making per an hour? Are you doing things one thing we talk about with our clients, I said, is everything that's important to them, right? Emotionally important. So some people might say my family's important, and I feel like I've been guilty of this in the past too. It's like, well, I'm working from sun up to sundown. So I'm not spending much time with my family. Does that make sense?
Yeah.
So making sure the values are aligned and your time is being used in the most effective way possible, but also making sure that you understand why you have the business and what you want it to accomplish for you. Because if you're putting everything back in the business, and I know we have outliers like Elon Musk, I know he puts everything back in, and he's going to be the world's first trillionaire.
He's not normal. We cannot compare ourselves to him.
Yeah. That's like comparing the guy on the local basketball court to one of the people on that. What did you call it? The dream team from the time before my time. But yeah, comparing somebody to Michael, you just can't.
Yeah, it's but you want to make sure that it lets you accomplish what you want to accomplish in life. So that's really getting clear on what your goals are. And some of that is business related. Like I've had clients come to me, I want a real estate portfolio, 5 doors, netting $500 each. And then some of them, it's just like, I want to, buy a boat. I want to buy whatever it is. It's different for everybody, but you want to make sure that your business is moving you in that direction, which makes sure you're taking profits and you're using it for your lifestyle. You're using it to pay off debt, buying regular boring investments. And every time you make a deal, every time you do a fix and flip, you get rental income. It's moving the needle in the direction that you want to go. Instead of just being like, oh, I built this great business, but I have nothing to save personally.
Right.
Which is a trap. I don't know why, but it is a trap.
Now, I'm just curious, do you integrate any of the concepts of the book Profit First, if you're familiar with that at all?
I've read the book and some of it sometimes. It's just for not getting caught in the trap. And I like the idea of having different bank accounts, like the operating account, taxes. I think that's great for real estate investors as well. Like I've done 2 flips, so I'm a beginner. I'm a believer though that you learn by doing.
Big time.
Absolutely.
So like if I'm going to be giving people advice on it, like on Bitcoin or whatever, I'm going to buy some Bitcoin and set up a wallet. If I'm going to talk about real estate investing, I'm going to do some real estate investing. Just so I know you get the nuance and fortunately some of the mess. Like we had skunks living under one of our great lighthouses or whatever. And we were there at the middle of the night, like setting up a light and a radio so they would scare them out and kind of seal it up. You want to say you get money, you want to set some aside for taxes. That's a big mistake people make, is they think I'm not going to worry about taxes till April 15th, April 14th. But you want to set aside enough for taxes. And something we do with our clients is the tax projection will have the CPA do, so they know exactly how much to set aside. And then, your savings, money for the next deal. Make sure you set up some long-term investments for your goals. And then just enjoy it because I've only done fix and flip so far, but it can be a stressful process. So go celebrate, have some extra money there for your lifestyle.
What areas are you seeing that are the most popular for people to invest in? And what areas do you focus on? Because obviously you can have a mix in the stock market. You can have large cap, small cap, et cetera. And then you can have people that are focused on alternative investments like crypto, private lending, and other areas. What do you focus on? What do you like to see your clients do?
I like massive diversification. So first, a boring portfolio, just because you don't really have to work to have VOO, VTI, that's the Vanguard, like total stock market, bond market. It's just really, it's hardworking money, but allows you to be lazy, if that makes sense. So if you keep putting money in there long term, it's going to compound and do well for you. So first that, and then we add some alternatives. So our clients did really well. We've always said to put some money in gold. And of course, that's done well recently. Now people want to invest in it. Back then, they were like, I don't want to put money in gold. It's so boring.
Yeah.
But it's funny. Once it's really expensive, everyone's like, I want gold. I want this. I want Bitcoin now.
Always.
But alternatives are a huge part because inflation protection is something that we believe is important now and is going to be more and more important as time goes on. As they keep printing money.
Yeah, that's not going to change anytime soon.
There's no way they can.
No.
We talk about incentives. It's going to be very hard to stop that without a lot of
The machine is going.
It doesn't matter who you are. So it's going to keep going. So buy something like, we believe in inflation protection. A small amount of Bitcoin. I'm not going to say like put 50% in Bitcoin. Real estate, I think, is great to have. A lot of the richest people have real estate for a reason. And private placement investments, we've seen that, private preferred stock.
Okay.
So we like diversification to the level that you can. First, starting with kind of like a simple, boring portfolio, and as you get more money, starting to protect against inflation, and then getting alternative investments like real estate, things like that.
Okay. Okay, so when they have, say, for example, real estate in their portfolio, is this something that you're conscious of and you watch their asset allocation, or is this something that you actively participate in with them?
That's another thing that kind of separates us from, just like an investment manager who just focuses on the slice of the pie that is the traditional investments, is yes, we do include everything, including real estate, in the strategy. And, worked with a few real estate investors. It tend to be like buy and hold type investors, got few rental properties, single family. But yes, we keep that in mind, and we'll give advice on that as well. So they'll say like, we're thinking about selling this property. I think a slam dunk advice, I'm using a lot of basketball analogies, but
it's okay.
Slam dunk advice we gave was back in COVID, when the interest rates fell, they plummeted. We had our homeowners, our real estate investors refinance everything at those rock bottom. But it sounds like, it sounds cool and like academic, they refinance, cool, but that helps their cash flow. That's more money that they're not having to put out, right?
Absolutely.
So, yeah, we look at everything. I hate these buzzwords because you hear them so much from financial planners, but holistically. We look at everything comprehensively all together. I'm trying to think of a way to say it.
No, I think comprehensively.
That's a good one. I like that. Yeah.
Yeah, absolutely. Because I don't see money as holistic. I think you have to be comprehensive.
I think that's a better. Yeah.
But you bring up a very valid point that what happens is, and I know this is something that Warren Buffett says, if the crowd is all going one way, you probably need to go the other way. Because what happens is they're all coming in after. The smart money has already left. By the time most people have heard about it, the smart money has moved on already and they're on to the next thing. So if you're getting into gold when it's at the top, or you're getting into one of these other things, and nobody can truly predict the top. But the point is, I like contrarian investing. And when everybody else is running away, I know that and this was just because I like contrarian and I like to do the opposite. It's just where my brain works. When I was a kid, I used to drive down one-way streets all the time in the wrong direction. Yeah. And I was caught by the cops multiple times. And I'd say, well, there's nobody else on the street. What does it matter? It said one way. I'm only going one way. And as you can imagine, that didn't go well with local law enforcement.
I'm sure they love that.
Yeah. But yeah, I like the alternative in March of 2020, I think it was. I was in Puerto Rico at a mastermind. And they were talking about closing down the U.S. And there was some serious talk during the mastermind because somebody knew somebody in the government and so on and so forth. So I sat back and I remember sitting in the mastermind and they're talking about whatever they're talking about. And I went back in my seat. I'm thinking, okay, they're talking about shutting things down for 2 weeks. We know the government's wrong all the time. So it's probably going to be longer than that. The same as they're always over budget and so on. So I'm thinking it's probably going to be a little longer than that. And I went and dropped $50,000 each in Facebook, Apple, Amazon, Netflix, and Google.
Wow.
And my thought was, it's not going to go to zero because of who they are. People are going to be on Facebook. People are going to be, buying stuff from Amazon. They're going to be watching Netflix. So let me just drop $250. And I
Yeah.
called my advisor at the time and he said, yeah, we don't know what's going to happen. I said, yeah, but it's like Rubbermaid. Rubbermaid's always
Yeah.
going to be there. It might go down, but it's Rubbermaid. So
Yeah.
these things are part of the economy. They're an integral part of the structure of the economy. I'm going to drop
And
it
Home
in.
Depot did really well too, because people are sitting at home and they're like, God, I got to redo this deck. I got to do this. I got to do that. I can't deal with this.
You notice all the issues with the
Yeah,
house.
exactly. Yeah.
Yeah, because you're sitting around and now that honeydew list, you get
Yes.
it. And you're like, okay, now you got time. Honey, let's go. So that's very funny. Okay.
Real quick, I love the contrarian approach. I think in finance, you have to think that way because your emotions run contrary to how the markets run. So when everything's, doom and gloom, it looks like the world is over. That's the time to buy. But it's like emotionally, you're like paralyzed. A lot of people are paralyzed. They don't want to take
Easier
action.
said than done.
I have one similar, which is Dave and Buster's, but it was when everything looked like we were never going to get out of lockdown. And it was like, it looked really bad and all the restaurants were shutting down. I bought some Dave and Buster's and it went crazy. And it did well.
That's cool. I'm reading here the liquidity stack for next deal readiness. Can you explain the system that you have in place for that for your clients?
Yeah. That's a huge, of course, it goes without saying, that's a huge thing for real estate is you need to have the money to fund your next deal. Having cash available. So, of course, you want to have maybe like 10%, just some rules of thumb, in a high yield savings account. Right now, they're touching around 4%. So you can find some good high yield savings account. Huge believers in naming each account. So if it's we're going on Japanese vacation in 2027, name it Japan vacation 2027.
Oh, I like that a lot.
That's
Stay focused.
They allow you to do it, right? So name it. You can pretty much name it at any bank account. So name the savings account next real estate deal, next rental, June 2026, whenever you're going to buy it. And you could put 10% down there. Maybe do some money market or something for the rest of the down payment that you would need for whatever the target size is for the next deal. And then starting to get leverage, I think, is huge. So sometimes we've seen people with large investment portfolios where they can just, take loans out, collateralize debt on that tax-free. But, a line of credit, building your business credit is a huge thing. So looking at your paydex and your business credit score and getting access to lines of credit so that when something happens and you have a deal, you can, use that line of credit, strike while the iron's hot, and then, move forward and keep getting those deals and not missing out because you're like, oh, now I got to get the money. I got to get my proof of funds, which is something, again, we lived during our first flip. We saw the process and we were like, oh, I wish we had kept some of that cash here instead of doing this. And
no one says, I wish I had less cash, especially when it comes to doing real estate and a flip.
Yeah. Cash helps a lot for sure. But it's just having the money available. And, if you think steps ahead, you're going to think, this is my next deal. This is how much I'm going to need in a down payment, closing costs, calculate all that stuff.
Yeah. Now, let me ask, when it comes to asset allocation, I'm making the reasonable assumption that you have an asset allocation strategy set up for your clients. Mm-hmm. And I'm wondering, do you handle the asset allocation or do they? And the reason I say that is because if I had somebody who was making my food and telling me what to eat, I would be in better shape. And when I had my financial advisor out of the Boston area years ago, he said, I will let you have access to the accounts, but he said, you have access to the accounts and I can't control that. But what I suggest is you not touch them. Because I'm going to look at this based on numbers and not emotion. I'm not going to think about you going away on vacation. I'm not going to think about the roof is leaking. That gets emotional. What I'm thinking about is you're supposed to have 20% in small caps, for example. So as soon as it is out of order of the way it's supposed to be, then I'm going to move it.
Yeah.
Because that's the allocation we've talked about and I've committed to you I'm going to do, and we signed an agreement and everything, so on and so forth. So how do you work that within your firm? I'm curious.
Yeah. I'm always, when you go to those restaurants and they're like, you got to cook the food. And I'm always like, I'm a big fan of, we like working with delegators, people who delegate their finances.
Yeah.
So we handle it, or we'll have a separate money manager who handles it. Who that's all they do is manage money. So they're a part of the puzzle, the investment manager. And same thing there. I think it's good to not make emotional decisions. So we'll tell them you have to have faith in the future. We don't want you like you can have a like some of our clients have a fun money, trading account, they trade options and things like that. We're not going to give advice to trade options because that would be like
Yeah. What advice do you give besides maybe
there
don't
is
do
no
it?
advice. The only advice is don't do that.
So we have some clients who do that, but they'll have a fun money portfolio, like a speculation portfolio that they manage.
Okay.
But other than that, we handle everything else. So we look at the big picture asset allocation. So it's not just this is how your Roth IRA is allocated in a vacuum. It's like this is how your Roth, your traditional IRA, your non-qualified brokerage, everything, even your cash accounts are allocated to get a big picture. And yeah, we don't want our clients really, saying, we want to get out of China. Look at what's happening to oil. We need to buy more oil right now, like things like that. No, they're usually financial delegators, and that means they trust us to make the decisions, tell them this is what we did, and make sure they're good with it. But then we take action on it, make sure.
Do you find that like a certain type of client that's easier to be a delegator? Like if somebody like was a blue collar worker, for example, and came into a bunch of money through an inheritance or something, like, do you have to twist their arm a little bit to change their mindset? How does that work?
Yeah, we don't try to change people. It's almost the philosophy of like, if it's not meant to be, we don't make the offer to work together, if that makes sense. And we're very polite about that. But you can kind of tell, like, sometimes, I'm trying to think of red flags, but through our process, we can see pretty clearly if someone wants to make all the decisions themselves. If someone is a do-it-yourselfer, like they want to do, and that's common with real estate, because I think real estate is like a do-it-yourselfer activity. They'll say, it's almost like they'll come to us for advice.
Okay.
And they want to see if their idea is good, but they never were planning to work with us in the first place, if that makes sense.
Okay, I see. Yeah.
Collaborator, they want to be like next to us on the plane and be like the co-pilot, and we're going to be like talking about like, this is what's going on in China. But we really want people who want to free up their time, want to free up their energy for things that are more important, and are comfortable with us coordinating the team and then answering to them and making sure everything gets done. So we create the strategy. The clients know it. It's not like it's top secret to them. They know what the strategy is. We present it to them, and then we start taking action on it. And with the investments, they may have one fund money investment account, options account, but the majority of it is going to be managed by us.
I'm sure that you have these in place, but can you explain to our audience what safeguards you have in place? Because there have been people on occasion that had done inappropriate things with other people's money. So what safeguards do you have so that you could, allay people's fears?
Yeah, you can check my broker check. So I've never done anything wrong in the past. I don't have any, but everyone can check the broker check for who they're working with, their financial advisor. And it'll say any disclosures, anytime they've been sued, anytime they've been found to lie to people or did insider trading. I think with that, think of Bernie Madoff and people like that.
Yeah.
They were promising things that were just ridiculous. It's almost like if it's too good to be true.
It is.
Yeah.
And kind of the greed. I wish I was that charismatic of a person. I don't want to be a psychopath like he was, but I wish I was charismatic where I could just lie to people like that. But I'm just, I'm not like that. I would never. I think ethics are the number one thing you have. I want to build this business on a good reputation. I want to be, I want my son and daughter, Luke and Vera, to be proud of me later on. But you can always check, the legal stuff, broker check. You can see how your advisor's doing, if they've made any mistakes in the past. And I'm trying to think of safeguards, but really it's radical transparency, I would say, in our business is just, exactly what you're paying to the dollar. What we're doing. You can see all your accounts in one place. They're going to be at Fidelity and Schwab. It's not going to be like, trust me, I'm making these statements type of things. Usually we're using Fidelity, Schwab, sometimes, a 401k provider, things like that. But it's not like I'm, managing it and commingling it like Bernie was back in the day.
Okay. And then am I correct in assuming that you can make the trades because you want to keep it within the asset allocation structure that you have set up, but you can't have the money sent to your company? Am I correct in that?
That's the rule. So our rules are set up that would be considered commingling funds, and that's illegal. But then, sometimes things are illegal and people do them anyway, if that makes sense.
No.
But yeah, that's totally illegal, and we would never do that.
Okay. Right. Awesome. Well, I just want to clarify that for people because I know with my guy before he retired, he could make trades, but no money could ever go to him. It could only go to the specified accounts in advance.
Okay.
And it could never change. So I just want to make people aware of that you've got these safeguards in place to protect them because, you trust, but you verify. Yeah. I think we should all do that.
I think that's huge. And yeah, but most of our investment accounts would actually be handled by a separate investment expert. And it's usually at Fidelity or Schwab. So it's like,
okay.
Can you give me, and I know you said you work on a case-by-case basis because everybody's situation is unique. I get it. What are you looking for as far as an overall return for somebody's portfolio that you think, okay, that's good, that's going to make everybody happy without, obviously, somebody who expects a 30% return, which is not realistic?
Yeah. So basically, we look at the amount of risk they're comfortable taking. And y'all are probably familiar. You send like a risk tolerance questionnaire to really, we send one of the more robust ones to get an idea of exactly how they feel about risk. We call it the risk number. And we want to get them, of course, the highest return possible at that level of risk. But for each goal, we look at what the hurdle rate is. So that's the rate of return that they need to get to hit that goal. And really, we're happy if they have more than enough of a hurdle rate or rate of return that they're getting on average, that they have a high chance of achieving the goal, which we consider like 99, 100% chance at the level of saving they're doing. So we kind of work backwards from the goal to determine what's the rate of return they need to get to hit this goal. And then we make sure that they're hitting that to have a high chance.
Okay, so do you say if this is what you want as a rate of return and this is your goal, this is the type of risk you need to be comfortable with? Are you?
No, we would never tell someone to take on more risk than they're comfortable with.
Right.
But there might be one account where they average out to be their average level of risk.
Okay.
So say one's a 50, and say 50 is like for simplicity cases, like 50% bonds, 50% stock. I know we would be more nuanced than that, but just say it is. We might say like, let's do a 70-30 portfolio for this because it needs a higher hurdle rate for this account. And then over here, let's do a more like 30, 30-70 portfolio.
Based on what they're trying to do. Yeah.
If it averages out to that 50-50. So we can do some there where there's like some that are more risky than others and some kind of temper it down because we look at it comprehensively, not holistically. But yeah, it's basically based on the goals. We like to beat the market. We have some money managers who have beat the market recently, or we have some that in 2008, they went down like 3% instead of 40%. Wow. And they tend to match the market. So we have some really good money managers, and we like to get a good return for the amount of risk that you're taking. But at the end of the day, we'll never tell someone to take more risk than you're comfortable.
Okay.
On the whole, altogether.
Okay. If people want to get a hold of you, what is the best way to do that? And everybody, just so you know, his contact information will be in the show notes.
I just want to talk about, if you want someone to coordinate all aspects of your finances, so you can focus on the things that are more important, you're comfortable delegating your finances, you can give me a call and we'll schedule that first step, that financial roadmap that we were talking about. And my number is 210-444-2128. That's 210-444-2128. Give me a call at that number. We'll get you scheduled and learn about your situation and see if, a comprehensive strategy is right for you.
Awesome.
Okay, now you're based in Texas, but you work nationwide. Am I correct?
I will, but most of my clients are here in Texas. I have a few in Florida. That's why I know some like attorneys and stuff like that in Florida. But I will work nationwide. Yes. I will.
Okay. Joseph, thank you very much for your time. It's very much appreciated. This was fun. And I know that for myself, even though I was an economics major and I read the New York Times for fun, the Wall Street Journal for fun, it can get dry. You made this a great conversation. I think you put it in terms that people are going to understand. So we really appreciate your time.
Yeah, I appreciate you all as well. Thanks for the opportunity.